In light of the central bank's Treasury bond controversy, 3 professionals challenged the appointment of the committee by the Prime Minister in a way of a petition in the Supreme Court. The petition challenging the appointment was filed by Dr. G. Pushpatta Arachi, Dr. A.C. Viswalingam and Chandra Jayaratnam.
The issuance of Treasury bonds by the CBSL in February was subject to much criticism by experts in the field of economics and also by professionals. It is reported that a loss in billions of rupees was incurred after tenders were called in for 1,000 million rupees and later increased it.
It was a bond issued for 1,000 million, but it was increased to, on the morning of the bid closing date, it was increased to 10,000 million, and thereby one company or their associated bank appears to have got at the highest rate of 12.5% interest, and that has raised the interest expectation, which was between 9.25 and 9.75 to an average of 11.73.
How will the increased interest rates affect the general public?
The people who borrow on housing loans and for business will have their interest rates going up, and it may even affect the small people who are borrowing for their day-to-day consumption or even the pawning. At the same time, when businesses pay this high interest, they will have to recoup it through the prices, and the prices will go up.
On the 10th of March, a 3-member committee comprising of lawyers was appointed to investigate this deal. The petition filed with the Supreme Court also requests that court direct the Monetary Board and the other associate respondents in consultation with stakeholders to formulate new systems, processes, rules and regulatory frameworks which assure transparency and best good governance practices in place in respect of future public debt issuance.
Culmination of that is a petition that was filed on behalf of the civil society and on behalf also of the people of Sri Lanka by 3 activists yesterday in the Supreme Court as a fundamental rights application. Where we are seeking relief measures only in respect of asking a competent panel of inquirers to be appointed to find whether there had been any irregularities or anything wrong with the bond issue that has taken place on the 27th, and secondly, to talk to all the stakeholders, for the committee to talk to the stakeholders and develop systems, procedures and processes which will make sure that such issues will not recur in the future.
The public interest petition that has been presented on Thursday is absolutely good news. It's a step in the right direction. It is essential to note that this Treasury bond saga contained many discrepancies. It has only served to raise a cloud of doubt. The losses, it must be noted, continues to accrue every day. Currently, experts estimate the losses at approximately 35 billion rupees. This is as of today. The losses will continue unless and until the government put a halt to this Treasury bond. In light of Arjuna Mahendran's admission that he has committed a mistake that has cost this country billions of rupees, there simply is no need for any committee to report on anything. Arjuna Mahendran should go